I'm Deborah Trow, founder of Elevation Wealth Partners, and this is the Elevation Market Update. With me today, I'm very pleased to be in conversation with Ryan Walker. He's with American Century Investments and is part of the Global Equity Growth Team. What Ryan does is to relay the strategy that American Century has with their funds to help me build portfolios. Ryan has been in the industry for 10 years at this point, and he's based in Kansas City. So welcome, Ryan.
Thanks, Deborah. Great to be here with you. Looking forward to our discussion.
Yeah, and we have a lot of questions for you. As you know, we're here at the beginning of a new year, and 2024 was a really great year in the markets. And so that's the big question is, what can we expect for 2025?
Absolutely. That's, as you mentioned, on the top of everyone's mind. We've had great years, again, in the large cap growth space and the equity markets in general through 2023 and 2024. So coming into this year, what's top of mind for us in our investment teams is really, can we sustain that growth that we have had over the last, call it 24 months? So we're coming in with markets at all-time highs, a lot of good news priced into the market. Multiples are at all-time highs, but we have elevated earnings expectations, which can hopefully propel equities throughout this year, above average GDP growth, and hopefully interest rates trending down, which could certainly be a tailwind for equities coming into 2024.
Yeah, and the big question on people's minds, we just had this inauguration a couple of days ago. And so what is the impact of this incoming new government?
Again, on the top of everyone's mind, a lot of good news, for the markets coming in with this new administration, really in two cohorts that we'd like to break them down into, and that would be deregulation, which of course is a boon to a lot of companies that don't have to spend the money on personnel to understand the regulations and implement them effectively. They can then spend that money on R&D and growth into the business to hopefully continue to reward us as shareholders. So we certainly see that as a positive. And the other would be, the tariffs possibly coming in with the Trump administration. That could be a detractor. It could certainly hamper growth. And it could also lead to elevated inflation, although on the good news front, it has seemed that the rhetoric around blanket tariffs has been kind of dialed down, if you will, and the likelihood of more targeted tariffs with some of our key trading partners, which would be Mexico, Canada, and China, are really on the top of everyone's mind. And even as recently as yesterday, we got some news out of the administration that they're looking for less impactful tariffs than were previously anticipated. And the market has overlooked that and has been up for the last couple of days. So the market is really seeing through the worst of the possibilities in tariffs, and that's been a boon for equities.
Yeah, and tariffs are definitely on our clients' minds. They are asking about that, but it sounds as though you're saying that we're going down the path of less impact rather than the worst case scenario that might have happened. And so do you have any particular companies you can talk to us about that might be impacted with that?
Certainly. So when we go through our portfolios, to your point, Deborah, we really look for the individual impact on the companies, since we're not anticipating those blanket tariffs. So one in particular is Constellation Brands, which does a lot of business in Mexico. They have some very known brands such as Modelo in the adult beverage space. And there's a lot of factories, and a lot of the product is made in Mexico. So we're going through our models and meeting with management to see the impacts that they anticipate on their business and the follow through to the customer, and any impacts on revenue generation, as a follow through that would impact the stock price. And so far, we're not seeing anything majorly detrimental in any of the companies that we invest
in. Yeah, and in the past year, you mentioned inflation. We talked a lot about inflation and interest rates over the past year. Does it seem possible that the Fed can get down to that 2% number that they've been talking about?
Certainly, when everyone has been talking about that again, as you mentioned, Deborah, for the last 3 years since the beginning of 2022, when the Federal Reserve began their campaign to increase interest rates to bring inflation under control. We think that they've certainly come a long way. They're well on their way to that 2% target, but given the above average economic growth in terms of GDP growth and employment not really budging, it's certainly been elevated. That employment number, we're slightly above where we've been pre-pandemic. That really stymies, in our opinion, the Fed's ability, at least in the near term, to get to that 2% target. The latest CPI number, which is a gauge for inflation, is just shy of 3%. So we've come a long way from that 8 or 9% that we saw in the middle of 2022, but getting that last leg down to 3%, we believe will be challenging in the near term. But I don't think that's a tremendous detriment to capital markets as it stands currently.
Something to continue to watch. I know that you never let go of looking at inflation and the impact. And
Absolutely.
so the area that you work in, your specialty is researching large companies. And I think almost every client that we work with has large companies in their portfolio, and is very interested in what you have to say about that. So tell us a little bit about American Century's investment philosophy.
You bet. So our investment philosophy, certainly as it pertains to large cap growth, is very long-term focused, with detailed risk management to help smooth out that profile. When it comes to large cap growth companies, there is some inherent volatility that comes with growth. So we're really focused on those building out models on these companies 5 and 10 years out, not necessarily focused on what's going to happen next quarter or even next year. Of course, we monitor those risks, but we're really trying to build that compounding value for our clients longer term, well into the future, in a space that has been critical for portfolios, as you mentioned, certainly at least over the last 5 years.
Where are you seeing some opportunities?
Absolutely. So coming into the year, I think the main theme for us, and has been the theme over the last 24 months, is this concentration that has built up in the large cap growth space, with a handful of names really dominating the market and the earnings growth that we've seen. And these are names that we've all seen on the news and know well, as we use their products on a daily basis, right? That's going to be Apple, that's going to be Microsoft, Nvidia, and Google, Amazon, and even Tesla. So we're really seeing we've done well in those names. They've come up a lot in terms of their price appreciation. So we're really looking outside of that narrow cohort for the next generation of winners in the growth space, if you will. So we're looking outside of technology and communication services, and we're seeing opportunities in areas such as healthcare, which has lagged tremendously, certainly over the last 12 months. A specific name is Structure Therapeutics, which creates a peptide which helps fight obesity, and also type 2 diabetes. And we all know that Eli Lilly and Novo Nordisk are two big companies that have been in the news with drugs like Ozempic that help with type 2 diabetes, and also weight loss. But Structure has a unique drug that will hopefully soon be on the market. It's gone through the clinical stages flawlessly, but it's an oral drug that has the same efficacy as these injectable drugs. So it really gives the patient a better experience, and we believe Structure can take market share in that space. So that's one of the names we're looking forward to seeing throughout 2025. And sticking with that same theme, names outside of technology and communication services, Rocket Lab is another example. As technology continues to permeate almost every industry, the need to get technology in orbit in order to, communicate and use things like GPS is becoming ever more prevalent, as more and more companies are launching these types of products into orbit again. So Rocket Lab competes with SpaceX, who's a private company. Rocket Lab's a publicly traded company, and they've developed similar technology that has the efficiencies of being able to be reused. So instead of having an expensive launch every time you need to get something in orbit, these types of rockets can be reutilized, and then you can reinvest that excess capital back into the company. So there's a lot of efficiencies there. I'll give you one more example with FICO, which is the Fair Isaacs company that is responsible for credit reporting, is in the financial sector. And we're really looking forward to seeing FICO, as hopefully rates continue to come down, maybe not as much as we expected towards the end of last year, but a boon in mortgage demand and housing can really benefit FICO, likely towards the latter part of this year. So those are the three names in particular we're looking forward to.
Yeah, so exciting to hear about new opportunities, companies that regular consumers don't really know anything about yet, but that you can bring to their portfolios as they're on the upward slope in the growth cycle there. And
Absolutely.
then you surprised me when you mentioned a company like FICO that just does its work in the background, it seems,
Mhm.
for our daily lives, and to know that there can be opportunity there that's tied to, like, the mortgage market.
Absolutely.
Um, so obviously you're looking really in depth with these companies to determine whether you'd like to own them and how much and for how long. I imagine you spend a lot of time in front of the computer, but how else do you assess a company?
Absolutely. That's a great point. We do spend a lot of time building financial models with a lot of different softwares to really, extrapolate the potential for future growth. But we believe a critical component of our process is actually meeting with the leaders of these businesses. And as a dedicated team with three large cap growth strategies and over $44 billion in assets under management, we have access, to the top executives of all of these companies in order to garner that additional insight that maybe the average investor would not be able to garner, right? Because it's critical. We get quarterly reports to feed that information into our models, but really sitting down and assessing the future long-term strategy of a company with the key decision makers is critical in the input to making sure we have the right components in our portfolio to give our clients the best chance for that compounding of shareholder capital long term.
Yeah, and I know you're part of the global equity team, so that speaks to things overseas as well. Are people actually going to other countries?
Absolutely. We have, several opportunities that we, have in the Netherlands and in Europe, the developed markets in Europe. So we do have analysts all across the globe that really understand the markets. They live in those countries. They speak with the management teams in those countries, again, in order to garner the insight that you need in order to make those long-term decisions. So absolutely.
Yeah, and all of this is a very active process, and that's what we really mean when we talk about an actively managed mutual fund or exchange traded fund. Um, so, Ryan, it's time to wrap up here. What kind of final comments might you have for us at this point?
Well, I think, playing off of your last statement there, Deborah, it's a very dynamic environment. Certainly, as we've seen over the last few years, there's a lot of concentration in markets. There's a lot of macroeconomic uncertainty, certainly an elevation in geopolitical risks. So we think it's critical for, our clients at every level to have access to, tenured investment professionals that can help them navigate the inherent risks that we see in capital markets going forward. So active management, we believe, again, at every level of the wealth management process, will be critical for good client outcomes going into the future.
Well, I certainly appreciate having a relationship with you to help me take care of my clients. Ryan, thank you so much for joining us today. It's been great to hear your insight into what's happening with the markets and investments. If you have a question that we didn't get answered, please feel free to reach out to Elevation directly. Otherwise, stay tuned. We'll be back in March with Noel Doiron of T. Rowe Price. Thank you.